CarMax, the giant that practically invented the modern used car superstore, is suddenly facing a crisis so shocking that even Wall Street analysts are scrambling to update their forecasts. And it all comes down to one brutal truth: the used car bubble has officially burst, and CarMax is getting hit harder than anyone expected. For years, CarMax thrived on high margins, low competition, and insanely inflated used car prices. They were selling 3-year-old cars for more than they cost new. Customers didn't like it, but they paid anyway because they had no choice. Fast forward to today, and the entire market has flipped overnight. The same cars CarMax bought for $30,000, $35,000, sometimes $40,000 during the peak madness are now worth half that, and if they're lucky. And here's the kicker: CarMax is still sitting on thousands of these overpriced vehicles. Cars they overpaid for, cars they can't move, cars that are now bleeding money every single day they stay on the lot. We're talking about Toyota Camrys that once sold for $32,000, now struggling to get $17,000. Ford Explorers that hit $45,000 during the pandemic, now begging for $18,000. Even luxury cars are collapsing. Stuff like BMW X5s, Mercedes GLCs, Audi Q5s, once CarMax's profit machines, now they're liabilities with wheels. But this crisis goes way deeper than price drops. CarMax built its entire business around predictability, predictable inventory, predictable depreciation, predictable demand. And when the market exploded with cheap new car incentives, record lease returns, and massive EV price cuts, the used car market lost every shred of predictability. The supply CarMax depended on suddenly became too expensive, and the demand they relied on evaporated. And here's the part nobody saw coming: CarMax's internal algorithms, the ones they bragged were smarter than dealerships, turned out to be completely wrong. These pricing models were built on historical trends that no longer exist. They kept buying high, thinking values would stabilize, but values didn't stabilize, they crashed. And now, CarMax is forced to dump inventory at losses so big they're rewriting their entire valuation strategy. Meanwhile, customers who once avoided CarMax because of the high prices are now flooding in. Why? Because the discounts are unbelievable. There are 4-year-old SUVs selling for the price of a cheap laptop. Cars that were $40,000 just 24 months ago are now popping up for $15,000. And that's not a glitch, that's the new reality. And this avalanche of cheap inventory isn't happening by accident. It's being pushed by several converging crises: repossessions hitting decade-high levels, rental companies dumping vehicles in bulk, EV prices collapsing and dragging down the entire used market, and banks refusing to approve high auto loan amounts because values are dropping too fast to trust. CarMax is caught in the center of this storm. And the scariest part is that this might only be the beginning, because the used car market is entering a phase nobody, not even the biggest automakers, are prepared for. CarMax's leadership is quietly panicking behind the scenes because they're watching something unfold that every used car dealer fears: the complete breakdown of consumer confidence. When buyers see prices falling this fast, they don't rush in, they back away. They start thinking, if this car is $15,000 today, maybe it'll be $12,000 next month. And that hesitation is deadly. It traps inventory, freezes sales, and multiplies losses. And it's not just customers hesitating, lenders are tightening up too. Banks that once approved $30,000 loans without blinking are now pulling back, demanding bigger down payments, higher credit scores, or rejecting deals entirely. Why? Because no bank wants to finance a depreciating grenade. They look at CarMax's lot and see cars losing value every week like melting ice cubes. And when financing dries up and sales crash even harder, this is where the spiral really accelerates. CarMax then has to lower prices again just to keep cars moving. Lower prices mean more losses. More losses mean fewer resources for new inventory. And fewer resources mean older, less desirable vehicles piling up. It's a death loop, and the company knows it. But here's the part almost nobody is talking about. CarMax's biggest strength has now turned into its biggest weakness. Their national footprint, their massive inventory, their high-volume business model, all of it depends on cars having stable, predictable values. The chaos in today's market destroys that foundation. Every new car incentive, every automaker discount, every used car auction crash causes another shockwave through CarMax's balance sheets. Take EVs for example. CarMax bought thousands of them at prices that made sense back in 2021 and 2022. But after Tesla slashed prices, Ford panicked, GM cut deals, and Hyundai dumped inventory, used EV values fell off a cliff. A CarMax manager recently described it as holding a pile of hand grenades with the pins missing. They can't sell them at the price they paid, and they can't hold them because they lose value daily, so they're slashing prices just to escape. But the collapse isn't limited to EVs. It's spreading across every segment. Trucks, once the safest bet in the industry, are tanking. Sedans, which saw a brief comeback, are sinking again. Even hybrid SUVs, once the hardest vehicles to find, are now showing up at auctions in droves. The market is correcting after years of inflation, and the correction is violent. And now CarMax is being forced to do something it has avoided for decades, something it absolutely hates: sell cars at a loss, massive losses, just to keep the system moving. And if that wasn't bad enough, the ripple effects are starting to hit their extended warranties, financing arm, and trade-in offers. Customers who bought cars at inflated prices are underwater. Customers trying to trade in get lowballed. Customers buying today see prices drop again in weeks. Everything CarMax built its empire on, trust, transparency, predictability, is being shaken. And behind the scenes, investors are demanding answers. How did the biggest used car retailer in America fail to see this coming? How did their pricing algorithms miss the largest depreciation crash in modern history? And what happens next if the market continues falling into 2026? Because analysts warn that the next phase of this crisis might be even worse. Because the next phase won't just be about falling prices, it'll be about oversupply, something the used car market hasn't seen in nearly 15 years. And oversupply is the one thing CarMax's system is absolutely not built for. Right now, fleets are dumping inventory like never before. Rental companies like Hertz, Avis, and Enterprise are offloading cars by the tens of thousands because they overbought during the pandemic and got crushed by maintenance costs. Banks are auctioning off repossessed vehicles at record volumes. Lease returns are flooding back faster than dealers can process them, and every one of these vehicles ends up competing directly with CarMax's inventory. So when CarMax tries to sell a $22,000 crossover, but the auction down the street is offering hundreds of similar crossovers for $14,000, CarMax has no choice but to slash prices. Again and again and again. Internally, executives call this the compression. That's when profit margins collapse from a comfortable $2,000 to $3,000 per sale to $100 to zero, and in many cases deep negative numbers. And a high volume business with collapsing margins is like a rocket losing engine pressure. It doesn't glide, it drops. But here's where it gets truly dangerous. CarMax operates massive reconditioning centers. These facilities cost millions to run. Every car that goes through them adds labor, parts, and time. When the market crashes, all that reconditioning becomes an anchor because suddenly the car isn't worth the investment. CarMax is stuck spending money on cars that won't give anything back. And the most painful part, the public is starting to notice. People walk onto CarMax lots and see hundreds of cars with marked down stickers, SUVs slashed 5 times in a month, trucks discounted $10,000 with still no buyers. It creates a sense of panic. Customers wonder, why is everything dropping so fast? What does CarMax know that we don't? That fear is contagious. It slows buyer confidence even more. And then the cycle repeats. Lower prices, lower profits, lower demand. Meanwhile, CarMax employees are quietly leaking information. Salespeople saying foot traffic is at its lowest in years. Managers admitting they're being told to clear out anything with wheels. Technicians complaining that cars are sitting for weeks waiting for parts because the company doesn't want to invest in reconditioning anything that might lose more value before it even hits the lot. In CarMax's leadership, they're trying to spin it as market normalization, but you don't call it normal when $40,000 cars are suddenly selling for $15,000, sometimes even less at auction. You don't call it normal when customers walk away from deals because they expect tomorrow's price to be lower, and you definitely don't call it normal when your entire financial model is being rewritten from scratch. Because the truth is simple, CarMax is facing the most dangerous moment in its history, and the cracks are starting to show in ways the public hasn't fully realized yet. From store closures, to desperate cash preservation moves, to inventory liquidations that look more like fire sales than strategy. And if the trend continues into the next quarter, experts warn the crisis could escalate into something far more serious. Something that may permanently reshape not just CarMax, but the entire used car industry. Because what's happening at CarMax isn't just a pricing issue, it's a structural collapse. Their entire business model, built over decades, assumes that used cars have value stability. It assumes trade-ins, auctions, and retail sales all line up in a predictable pattern. But that pattern has been shattered, and when the foundation shakes, the cracks show everywhere. From investor confidence to employee morale to customer trust. Even CarMax's stock tells the story. Analysts who once rated it a buy are now issuing warnings. Revenue projections are being slashed. Earnings guidance is being withdrawn mid-quarter. And yet, the stock market still hasn't fully priced in the scale of the losses sitting on their lots. Because here's the brutal reality. For every car they sell at a loss, the financial hit isn't small. It's tens of thousands of dollars per vehicle on high-end inventory. Multiply that across thousands of cars, and suddenly, CarMax's balance sheet is bleeding faster than it can recover. And while they scramble to stabilize the business, other competitors are circling like sharks. Private dealerships are undercutting CarMax prices. Online platforms like Carvana and Vroom are offering faster, cheaper options, and local auctions are dumping cars at rock-bottom prices. CarMax used to be untouchable, the safe national brand where buyers felt secure. That perception is eroding by the day, and perception in the used car market is everything. The fallout is also spreading to consumers who thought they were smart buying at the peak. People who purchased vehicles for $40,000 2 years ago are now sitting in cars worth $15,000 to $20,000. Negative equity is spiking, loan defaults are ticking up, and banks aren't just tightening credit for CarMax buyers, they're tightening it across the board because used cars are no longer reliable collateral. And insiders say the mood inside CarMax stores is grim. Managers are under extreme pressure to hit sales targets that are now virtually impossible. Sales staff are frustrated, inventory managers are overwhelmed, and the corporate offices are running scenario after scenario, trying to figure out how to stop the bleeding without a total market collapse. But here's the question nobody has an answer to yet. How long can this continue before CarMax is forced into drastic measures? Are we looking at massive store closures, layoffs, or even a fire sale liquidation of inventory? And what does that mean for the millions of Americans who rely on CarMax not just to buy cars, but as a trusted middleman in a chaotic used car market? Because if CarMax falls, the ripple effect could reshape the entire industry. Prices could drop even further. Competitors could crumble under the pressure. And what was once considered a stable, recession-resistant sector, the $500 billion used car market, could face one of the most violent corrections in history. And that's why everyone is watching closely, because $40,000 cars selling for $15,000 isn't just a headline. It's a warning shot, a signal that the market we all thought was safe might be heading into uncharted territory. And here's the part that's really alarming. CarMax isn't just losing money on current inventory. They're making decisions that could haunt them for years. Every vehicle they bought at inflated prices represents sunk costs. Every markdown they're forced to take chips away at future earnings. And the longer they hold onto unsold cars, the more the market continues to punish them. It's a vicious cycle with no easy escape. Some insiders hint at desperate strategies in the works. Bulk sales to wholesale buyers at massive losses. Partnering with auction platforms to move cars faster, even if it means wiping out weeks of profits. Even experimenting with subscription style or short-term rental models just to get cash flowing again. But these moves are stopgaps, temporary patches on a system under stress. And every solution exposes CarMax to more risk, more scrutiny, and potentially more public backlash. Meanwhile, the media is starting to catch wind. Articles are emerging about fire sale prices and CarMax liquidation fears. Social media is buzzing with consumers bragging about deals that were once unimaginable. Trucks for $12,000, SUVs for $15,000, luxury vehicles for less than half their previous values. On one hand, this is a marketing boon. Buyers love a bargain. On the other, it sends a loud signal. The empire isn't as untouchable as it used to be, and investors aren't blind to it. Hedge funds, short sellers, and activist shareholders are circling. They smell opportunity in weakness, and if CarMax's problems worsen, it could trigger a scramble for control, restructuring, or even a forced sale of assets. What was once a stable, blue-chip holding in the automotive retail space could suddenly be upended, and the consequences would ripple across dealerships, lenders, and the used car ecosystem as a whole. The The question now isn't whether CarMax will weather this storm, it's whether the used car market itself can survive this kind of correction. Because $40,000 cars dropping to $15,000 isn't just a CarMax problem, it's a systemic problem, revealing how over-leveraged, overpriced, and fragile the entire industry has become. From auto auctions to bank loans to online marketplaces, the shockwaves are just beginning, and for the everyday consumer, this is both terrifying and fascinating. Terrifying because the value of vehicles, often the second largest investment for most Americans, is collapsing. Fascinating because opportunities to snag high-quality cars at bargain prices have never been greater. But as history shows, markets that move this fast almost always bite back, and the fallout from CarMax's crisis could reshape pricing, financing, and inventory strategies for years to come. And the ripple effects don't stop at CarMax or the used car market. They're spilling over into new car sales too. Automakers that once relied on strong used car resale values to justify high new car prices are now recalculating everything. If a brand new $45,000 SUV can drop to $20,000 in 2 years, customers start questioning the value of buying new at all. Incentives, rebates, and aggressive leasing deals are being pushed even harder, and the entire pricing structure across dealerships is being shaken to its core. Even insurance companies are taking notice. Cars that lose value this fast change risk calculations, collision coverage costs, and total loss payouts. Lenders are adjusting loan-to-value ratios and tightening credit, and fleets that once relied on predictable depreciation models are scrambling to avoid massive losses. Essentially, the collapse in used car prices is sending shockwaves across the entire automotive ecosystem. And CarMax is at the epicenter. Inside CarMax, there's a growing sense of urgency. Executive meetings reportedly stretch late into the night. Strategies that worked for decades, buying high-demand inventory, reconditioning it, and selling at a healthy margin, are failing spectacularly. Every decision now carries massive consequences. Do they dump inventory at a loss to maintain cash flow? Do they slow buying to preserve capital, risking empty lots and losing customers? Or do they try experimental pricing models that may alienate buyers further? Every path is a gamble, and while the company scrambles, the public narrative is forming fast. Headlines scream about bargain deals, social media posts brag about massive markdowns, and forums speculate on CarMax's future. The irony is brutal. Customers think they're winning big, while CarMax is quietly losing millions with every car that leaves the lot. It's a market reversal so extreme that it almost feels unreal. $40,000 vehicles now selling for $15,000, and yet somehow the bigger crisis is just starting to unfold. Experts warn that if the trend continues, CarMax could face a scenario few ever imagined. Inventory glut, cash flow crunch, and investor revolt all at once. And that's not even counting potential legal scrutiny, regulatory pressure, or the domino effect across smaller dealerships that rely on CarMax for pricing benchmarks and trade-ins. The fallout could be massive, not just for CarMax, but for anyone connected to the automotive resale chain. The bottom line, CarMax's empire, once untouchable, is suddenly vulnerable. The market is moving faster than their systems, faster than their executives, and faster than the public realizes. $40,000 cars selling for $15,000 isn't just shocking, it's a warning. And if the used car market doesn't stabilize soon, the consequences could echo across every dealership, every lender, and every consumer who owns a car today. And here's the thing that's truly unsettling. This crisis isn't just a short-term hiccup. It's a structural shift. CarMax thrived for years because they could predict trends, manage inventory, and rely on a steady flow of buyers willing to pay premiums. But those rules no longer apply. The pandemic-era boom is gone. EV price wars are accelerating depreciation. Lease returns are flooding the market. And CarMax's pricing algorithms, they're now chasing a moving target that changes by the week. Inside the company, whispers of worst-case scenarios are growing louder. Analysts warn of potential massive write-downs if inventory can't be sold quickly. Executives are forced to choose between selling at a loss or sitting on unsellable cars while the market drops even further. Each decision risks either financial hemorrhage or operational chaos. It's a tightrope with no safety net, and the stakes are enormous. Meanwhile, customers and the public are inadvertently adding pressure. Social media is flooded with stories of unbelievable deals. I just bought a BMW X3 for $18,000. Posts spread virally. People share screenshots of SUVs and trucks selling for less than half their former value. And while these posts generate excitement, they also accelerate the sense of panic, encouraging potential buyers to wait for even lower prices, slowing down sales even further. The financial implications for CarMax are staggering. Hundreds of millions of dollars in previously valued inventory have lost their worth in months. Reconditioning costs, lot maintenance, and staffing aren't going away, meaning every unsold car is an active drain on cash flow. Even their financing arm, once a strong profit center, faces pressure as loans become underwater almost immediately. CarMax isn't just losing money on cars, the entire business model is under siege, and competitors are circling. Carvana, Vroom, and even smaller regional dealerships are taking advantage, offering faster delivery, better prices, or more flexible financing. CarMax's long-held, trusted national brand image is being tested. Customers may still walk in for the name, but the price gaps are forcing people to shop elsewhere. Loyalty is fragile, and in a market moving this fast, perception changes in a heartbeat. The big question now is whether CarMax can pivot fast enough. Can they adjust pricing, control inventory, and restore confidence before the losses spiral further? Or will we witness a historic unraveling of the largest used car retailer in America? A company that once seemed untouchable, now scrambling for survival in a market that no longer plays by the old rules.